Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. After 10 months, inflation has dropped below the RBI's threshold of 6%. A sharp fall in food prices, especially vegetables, took the consumer price index to 5.88% in November. Food inflation is now below 5% and vegetable prices contracted by more than 8%. Many economists now believe inflation could hit 5% in a couple of months if the current trend persists. While the fall in inflation brings much-needed cheer for the economy, the growth engines are sputtering. Industrial production in October contracted by 4% to the surprise of economists and market watchers. This is the slowest pace of growth in 26 months. Lata Venkatesh joins us with a wrap of the inflation and the IIP data as well. Lata?
On a day when the government says it will not reveal the contents of the letter that the Reserve Bank has written explaining why it could not bring inflation below 6%, the best of news hits the Reserve Bank. Inflation for the month of November is indeed below 6% after 11 long months, coming in at 5.88. But the better news, as you point out, is that it has come in way below street expectations. Street expectations were running between 6.3 and 6.4%. The biggest surprise is coming in food inflation. People were expecting food inflation at about, 5.5, 5.8%. It's come in at 4.6, and there's a steep fall in vegetable prices and, of course, edible oils, fruit, and even pulses to some extent. So this combined impact of several food items has brought down the overall inflation level. The negative in the inflation number is the core inflation. Core inflation are largely services, education, health, transport. This is not falling, and it is very difficult because these can't be imported. That, as the Reserve Bank pointed out in its previous policy, has become very sticky, coming in at 6.2 for November, way above the Reserve Bank target, of course, of 4% for overall inflation. The Reserve Bank is worried that core will remain at 6%, and that's why it sounded hawkish in the previous policy. So looks like that hawkishness will continue. But the headline inflation falling is very important, and the bond markets are bound to react very positively to this when they start trading. The negative number also comes from the index of industrial production, which is for the previous month, October, coming in at minus 4%. It's a serious indicator of weakness in manufacturing. Manufacturing has come in at minus 5.6 for October. Consumer goods, both durables and non-durables, are minus 13, minus 14%. So clearly, growth is under threat, but inflation is under control.
Yes, that's the update as far as macros in the country are concerned. Moving on.